Good morning, and let's get oriented. I'm Lázaro Ulloa, owner and founder of Ulloa Financial, and here is what matters for the week ahead. This week, the market is focused on three pressure points: inflation, the consumer, and whether AI driven optimism is turning into real business results. And after last week's volatility, this is not just another data week. This is a week that could help set the tone for the second half of March. Let's start with the headline risk. Oil prices have been moving higher largely because of rising geopolitical tensions in the Middle East. And that matters because when energy prices rise, they can quickly work their way into transportation costs, business expenses, and inflation expectations. That brings us to the most important number on the calendar. On Wednesday morning at 8:30 a.m. Eastern, we get the Consumer Price Index, or CPI. This is the report that the markets will likely treat as the make or break event of the week. If inflation comes in hotter than expected, investors may begin to price in a Federal Reserve that stays higher for longer. If inflation comes in cooler, that could ease pressure and give stocks some breathing room. So when Wednesday arrives, the question is simple. Is inflation continuing to cool, or is energy starting to push the story back in the wrong direction? Then on Thursday, we get another important inflation signal with the Producer Price Index, or PPI. Think of that as the business side of inflation. It helps show whether companies are absorbing high costs or preparing to pass those costs on. But Thursday is not just about inflation. It is also one of the most revealing earning days of the week. Oracle and Adobe give us a read on software, cloud demand, and the bigger AI narrative. What the market wants to see now is not just excitement, it wants proof. Proof in revenue growth, proof in spending durability, proof in margins. In other words, are these companies actually turning AI momentum into hard cash? And then there's Dollar General. That report gives us a very different kind of signal. It tells us about the budget conscious consumer, the household that feels pressure first when everyday costs stay elevated. So Thursday gives us a fascinating split screen: high margin tech on one side and real world consumer strain on the other. On Friday, we close the week with a preliminary University of Michigan Consumer Sentiment Report, and that comes in at 10 a.m. Eastern. This is where we get a look at how households are actually feeling. Not just what economists project, but whether consumers feel more confident, more cautious, or more squeezed. And that matters because when confidence starts to crack, spending often follows. So here's what I'm watching most closely this week. Number one, inflation. Does Wednesday's CPI report confirm progress, or does it reopen concern that price pressure is becoming sticky again? Two, AI earnings quality. Do Oracle and Adobe show real monetization through growth and margin strength, or does the market begin asking harder questions? And three, consumer resilience. Does Dollar General, combined with Friday's sentiment data, suggest the consumer is still holding up or starting to bend? Now, one caution. This is the kind of week where markets can move sharply on headlines and then reverse just as fast once the full picture sets in. So do not confuse the first reaction with the final message. The actionable insights this week is simple. Before Wednesday's CPI report, know your risk, review your positions, and make sure your decisions are anchored in discipline and not emotion. Because in a market like this, discipline matters more than prediction. Stay oriented, my friends, and elevate your legacy.